Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Dr. Tatiana Mitrova, Research Fellow at the Center on Global Energy Policy at Columbia University. Dr. Tatiana, thank you so much for joining us. We have a lot to talk about today and get your perspective on. I think it's been a few months since we directly got your perspective. Let's start with, of course, the news of the day, which is the war that we've seen break out once Israel attacked Iran, and that has obviously escalated over the weekend in terms of military action. And yet, we saw obviously when this happened last week that the oil price did jump about 10-12%, but that's it. We don't see any more reaction from oil markets. So from the market perspective, do you expect that we'll see further escalation, or what does that tell us about the supply situation?
You're right, indeed. The price spike, it wasn't incredibly high, 10-12%. It's still felt by the markets, but it's not a disaster. There is a huge uncertainty, and none of us knows how exactly this war will further evolve. Will it be like a year ago, just a temporary conflict which will then settle down? And it looks like currently markets are pricing in this scenario. But we all understand that actually it's still very unpredictable. It can go for more massive escalation. It can actually go even to the nuclear escalation in the worst scenario, I would say catastrophic scenario. And they started, both Israel and Iran, to target energy infrastructure, which wasn't the case during the previous escalation. So right now, there are several terminals in Iran affected, both oil and gas production. There are several. Israel obviously had to shut down its gas production in the offshore zone. It's not such big volumes. Everyone is rather afraid of Strait of Hormuz. It's San Graal of the global oil trade. And at the moment, it doesn't seem that the situation is going in that direction, but we cannot rule it out.
You cannot rule it out. As you said, that is the big elephant in the room, isn't it? Because real disruption, that's what we're seeing: refineries hit, we're seeing nuclear sites being hit, and the oil price is muted, but we haven't seen Iran take any measures on that front. It has said it could do so, and many are saying if it actually does use that card, that's just a disaster, not just for oil price escalation, but everything else. Under what circumstances, to putting your geopolitical hat on, why wouldn't Iran use that card, given that militarily it is obviously dwarfed by US and Israel, and obviously economically it's under stress as well? Would you see that card being played?
I would say probability is rather low. For Iran, it's a real suicide. So I would rather put it other way around. It will be, if it happens, it's like the last action of the current regime. When they understand that there is nothing else to lose, that could be an act of revenge. But the regime will hardly survive it. So as long as they still have hope to somehow settle the situation, they will not use this card, most likely. But how, again, we don't know.
Yeah, absolutely. And of course, we have the G7 presidents meeting as we speak in Canada. Of course, this is going to be top of their agenda. It was going to be probably trade and tariffs. I'm sure this is now going to be top of mind for everybody. But I wanted to ask you about where Russia stands, because obviously Russia, you've got two scenarios. I wanted to ask you on the oil front, but also Russia is a strong Iran ally. It's already come out and spoken against what Israel has done. But from an oil market point of view, again, should Russia be happy about this or not? Is it going to benefit the Russian leadership in the short term that there is A, this distraction, but B, that one of its strong allies in the Middle East is under attack?
You see, Russia has to maneuver. So obviously in the public space, it's not showing its joy, but oil prices going up from 50 to 75, that's really a big present for the Russian leadership. At the same time, as you've mentioned, Iran has been a military ally who was supplying drones for the war in Ukraine. So it's really bad to lose one of the few allies left. But at the same time, for the survival of Russian economy, oil probably matters more. So I think in total, the feeling in Kremlin should be rather positive, but very cautious because, as I said, Russia has to keep this engagement with Trump, who named already Putin like a negotiator in this conflict,
right.
which is raising his global influence, obviously, from a pariah state, which nobody wants to deal with, to a sudden peacemaker, which is a bit controversial. But it also increases oil revenue. So all in all, I think Russia is benefiting from this situation.
Yeah, I mean, it's increasing oil revenue, prices have gone up, but also Russia is still technically under the price cap, limitation, let's say, which has, had its dynamics the last couple of years. So I mean, recently, before we saw oil prices recover, real oil prices were getting close to the cap on Russian oil, which is $60. So how much can Russia really benefit from these higher prices? Is the cap really being enforced or not?
Since Trump came to the cabinet, the enforcement of the sanctions has decreased substantially. It wasn't, frankly, very strong even before that. When it comes to oil, it was different on the LNG side, by the way. But with oil, there were always some bypasses and options how to settle it down. So rather, this oil price cap was increasing transaction costs for Russian companies who had to establish lots of intermediaries and find and
Yes.
contract new and new shadows fleet, but it was solvable. Right now, sanctions enforcement is not on the top of agenda of the US. The EU is discussing decreasing this price cap down to $45 per barrel, which isn't supported so far by the US. We will see today what happens in Canada G7 meeting, but I strongly doubt that it will happen. So at the moment, Russia finds the ways how to bypass this cap, frankly.
And I mean, one of the buyers of Russian oil, one of the major buyers in the last couple of years at least, has been China. Happy to take cheaper oil than perhaps other importers who are following the sanctions more tightly. Where's China placed today with everything that's going on? Obviously, higher prices aren't good for a big consumer like China. And also, again, geopolitically, it's come out strongly against what's happened this weekend. It's been taking a lot of Iranian oil as well. Should there be much concern there? Or is the demand scenario in China quite weak, and so we're not going to really see much big impact from that?
China is indeed experiencing this oil demand plateau, and at least oil for fuel usage has peaked already. The economy is in difficult situation as the tariff war started, and all the consequences of COVID are still not gone. So China would prefer to have cheap oil, obviously. If Iranian oil is not available, Russia is always an option. And again, benefiting from this situation, having more export opportunities. But generally speaking, Chinese oil demand will rather depend on the relationship with the US and how China-US trade war will end. So you see, we are now talking about at least three major wars, two like real military conflicts, Russia, Ukraine, and Iran, Israel, but also this trade war between China and the US. It's unprecedented situation.
Yeah.
So when we are trying to build any outlooks, we have to keep in mind that it's a war outlook, which is highly unpredictable.
Yeah, absolutely. I mean, as you said, so many uncertainties on so many fronts. I mean, the trade, the China-US trade, they have a little bit of a hiatus now. There was a pause and a sort of agreement to disagree for a while. But clearly, still a lot of nervousness, not just for China, but for the rest of the world. I mean, the US tax trade situation, tariff situation is very unpredictable, and we don't see any certainty coming back from that. Let's talk a bit about, Dr. Tatiana, OPEC Plus, because that's another big player in the energy markets, obviously. It has, contrary to market indications, been adding oil as planned, but it's been sort of doubling down on those volumes the last couple of months. Now, perhaps we know why. It perhaps was predicting and foreseeing that there may be a conflict and prices may go up, and there might be a feeling of threat to supply, although not physically yet. Do you think that OPEC Plus will continue with releasing those volumes as we go forward? Did it call it right? Any other concerns OPEC Plus should have at the moment with the markets?
So the only real concern for OPEC Plus is Hormuz. Yeah, because then none of its policies will work properly. Otherwise, I think it looks like they were really predicting this escalation in the Middle East. And in April, it looked really controversial. Many analysts were questioning this decision. Why do you increase oil output when Chinese demand isn't actually there? Now we see that it was a smart move. They were really stabilizing, they are stabilizing the market. So I think they will keep doing the same because unfortunately, once again, in these very turbulent times, risk premium will be there.
Absolutely. And where does that put non-OPEC oil? Because again, with the recent increases in OPEC Plus volumes, people were saying, well, it's a market share thing. With non-OPEC Plus countries, it's also internal discipline. Machinations. US production was looking a bit negative for the year at the moment, especially as prices were drifting downwards. What's your outlook for US oil for the remainder, for the second half of this year?
I would say now with the prices going up, there is again a signal and break-evens in Permian now below the price, which makes it more attractive. But it will all depend on the regulation and actually the key bottlenecks, they are within the US infrastructure, not only the external price. The US oil producers, they are not reacting on a daily basis. Okay, price went above 70, let's drill, baby, drill. They need longer time for certainty, for their financial flows to be settled. So I think we will not see a lot of flexibility, a lot of reaction from the US producers. Basically, I would foresee flattish outlook for their output.
Okay, what about LNG? Let's talk about US LNG, and then we'll talk a bit about European gas as well and Russian gas. Again, we saw a lot of US LNG coming to Europe to replace some of the pipeline gas from Russia in the last couple of years. That doesn't seem to have stopped, but of course, according to how cold it is in Europe and what the demand might be. But again, do you see that position being held going forward? Obviously that's based on the assumption that we still see a Russia-Ukraine war carrying on. But US LNG versus Europe, perhaps in the medium term future, taking back more Russian gas, perhaps as we see the situation in Ukraine resolve itself over the next 6 to 12 months.
Well, first of all, frankly, I do not see any positive dynamics in Russia-Ukrainian conflict, unfortunately. So despite these negotiations which were initiated by Trump in May, in early June, both sides started again to strike energy infrastructure, and the general attitude is very skeptical, both from Ukraine and from Russia. My perception is that the conflict, unfortunately, will last into 2026, 2027 as this war of attrition, very bloody war. But okay, for the gas markets, it means that most likely Russian gas is not coming back to Europe. It was an incentive from the US side to bring Russia to the negotiations table. You remember all these speculations about Nord Stream 2 revival, yes, and Russian gas flowing back via Ukraine. We do not see any signs of that at the moment. Moreover, right now, the European Union is discussing quite seriously banning completely Russian
Yes,
gas
that's right.
by
Within the next couple of
2027.
years.
Yeah,
Yes.
and the longer Russian gas stays out of European market, the lower is the probability of its comeback, because European Union is replacing it with the other sources, including the US LNG. Moreover, if you look route by route where this gas could come from, Yamal Europe is highly unlikely via Poland. Nord Stream, it's a real legal swamp.
Yes.
Yeah, it's very difficult to structure it, and also with all the sanctions and restrictions from the German side and European side, Ukrainian transit, as you can imagine, can be revived only if there is at least ceasefire. Not necessarily peace deal, but ceasefire. We don't see it at all. So, yeah, I wouldn't expect much of
You wouldn't
Russian gas.
expect it. And how, okay, and so that's on the sort of ceasefire possible front. And as you said, the longer Europe reliance goes without it, the more entrenched it becomes. How much is the energy transition renewable story in Europe pushing that as well? You know, i.e., you know, the reliance factor on Russia. You know, A, they took more US LNG. B, let's speed up renewables capacity. Do you see that being pushed as a result?
It was pushed back in 2022, this Repower EU, but to significant extent, it was energy efficiency gains and reduction in consumption due to the industrial demand destruction. Yeah, so you are not pretty
That's
sure
right.
if it is like a real energy transition or rather demand destruction. Of course, renewables are growing, not at incredible speed, but they are growing. Still, we see simultaneously all these additional electricity demand coming from the data centers and
Absolutely.
AI, which is actually offsetting significant part of these energy savings. So all in all, I would say there is no miracle. Europe didn't switch completely to renewables, and it will take maybe like a decade or 2 decades before this transition will really allow to get rid of reliance on gas imports. So yes, European gas demand is slowly going down, but it's still there and it has to be somehow satisfied.
As you said, I mean, that power demand coming from the new data centers, which are only going to grow. Um, how much concern should we have when we saw the recent power cuts in Europe? We saw that one big one in Spain, Portugal, something in France as well. I mean, is that just coincidence that it's happening now? Why do you think that occurred now? Was it just a technical issue, and is that going to change perhaps the renewable strategy? Either push it forward or bring it back.
I think it is just changing the perception of infrastructure and coming back to the understanding of the importance of the grids, because everyone was investing in solar and wind parks in the generation while the grids were neglected. You
Yes.
cannot transition without refurbishing substantially all the grids and creating. And it's not a simple task, because with the renewables, you still have to somehow guarantee grid stability. So from the engineering point of view, it's a big challenge. So I'm pretty sure that there will be a lot of investigations. We still don't know the results of an investigation in Iberian blackout. But I think everyone in Europe now realizes that by installing solar panels, we do not solve the issue. It needs to be much more profound and unfortunately much more expensive work. And then coming back to the geopolitical discussion, if there are several wars ongoing and Europe is making this decision to militarize, military budgets are growing through the whole
Yes.
region. What will be available for energy transition? Yeah, security is
Absolutely.
always going first. So how much investment will be available for all these grid development? That's a big
Yeah,
question.
absolutely. And I mean, as you said, Europe has recently sort of doubled down, Germany obviously being the big one, which went to the debt markets for the first time in a long time, and of course leading perhaps the way in terms of defense security. And of course, you've got the energy security as well there. I mean, given those budget constraints, and you just said it yourself, you don't see the Russia-Ukraine war resolving itself for at least a year, if not two. What is the sentiment on how the European economy is doing at the moment? We had COVID, post-COVID, we had a bit of a blip of a recovery, but we've had so many challenges there, and now the budgetary problem. Versus the US economy, which one do you say is going to suffer first, if you like, if we continue to see these conflicts across the world, and then add on top of that the trade issue?
So if we are talking specifically about the conflict in Middle East, of course, Europe as major importer is much more vulnerable than the US, which has its own hydrocarbon production. So for the European consumers, spikes in oil and gas prices will be really dramatic, and there might be even problems with physical supplies availability. If Strait of Hormuz is closed, then we cannot exclude it. If you add on top of that also really weak economies, so inflation and GDP growth rates are not inspiring at all. And then you didn't mention another factor, which is quite important. It's the political division inside the EU.
Yes.
Basically, in each and every country of the European Union, you can see this confrontation between the left and the right-wing parties. And population is really disoriented. So we might see very strange developments on the social side. People are dissatisfied. They don't like what is happening. I'm afraid Europe is more vulnerable at the moment than the US. But at the US, you have very strong leader with his own agenda who sometimes creates very unpredictable situations.
Absolutely, yeah, making planning very difficult. I mean, you mentioned the inflation story, GDP, challenges going forward, both from, if you look at Asia, Europe, and the US, really, which they've all been downgraded in the last few months because of the trade situation mostly. So you've got that sort of bearish sentiment on economic growth, which is not good for the oil price. But then you've got the geopolitical risk, which is buoying it up. How far do you think we could see the oil price go? Forget the Strait of Hormuz being closed, but taking that out, the equation of geopolitical risk versus bearish GDP growth, which is going to win that with the oil price? Could we see oil prices go much further up from now if all remains the same, given the supply scenario?
So if there is no massive disruption with the Straits closure, I don't think that we will see oil prices going significantly up. So oil is still blood of the global economy, but its weight is really going down with massive electrification. And I don't foresee any miracle with Chinese demand and Chinese economy. All the other emerging economies in Southeast Asia, India specifically, they are also not showing signs of massive demand growth. So again, it's not as simple as supply-demand balance in the chart. It's more about expectations of the traders in the market, and these expectations seem to be more focused on the demand side, on the weak demand side, rather than fears about sudden supply disruptions. So there are spare capacities. If OPEC Plus can bring this oil to the market, they can solve it. $5, $7, $10 per barrel. That's it. That's the maximum premium that can be happening.
Dr. Tatiana Mitrova, Research Fellow at the Center on Global Energy Policy at Columbia University. Thanks so much for joining us today on Halftime Talk. It's been great to get your very valuable insights.
Thank you, my pleasure.